Welcome to Aha Math and Science. Well, it's time for a summary of this week's market. And let's take a look at what the market did over the past week and also what we would expect for the coming weeks. So on Friday, all the major indices were in the red. However, for the week, all the indices actually matched the gains. In fact, the larger caps had an impressive gain of more than 2%, while the small caps logged about 0.5%. For the week, the VIX actually declined. Now, the VIX is not really kind of interesting because it closed at 13.54. This is actually quite low, and you can see that this is a weekly chart of VIX, and since 2018, now the VIX is actually pretty much the lowest weekly close since January 12th of 2020. So it's not even lower than any of the lows it had, including the lows before this the start of this bear market. So this is kind of during June and also October when the VIX was really low, and that was before the bear market started in January of 2022. And this is very interesting because if you look at actually the 2000 and the 2008 bear market, we do have this bear market rallies, and for this bear market, we also had this bear market rallies where the VIX dipped. But these lows should not need to exceed the lows before the bear market started. But in these two, and in actually in these three, this one, and this one, all these bear market rallies, this VIX was still held, above the lows before the bear market started. But now recently, broke below these lows. So this really kind of make people wonder that, and maybe this rally that we are seeing now is indeed the start of a new bull market. There is this possibility that exists. So we need to be really kind of respect what the market is telling us. Look at the VIX signal, and then perhaps the rally we are seeing here could have more room, upside room, to go. So that's the VIX. Now let's take a look at the S&P500. That's the weekly chart. As you can see, it had another long green bar. So from 4,300 to now to 4,400. In fact, for this week, it's actually it closed at 4,409. So that's now exceeded all the August high, and now it's really kind of marching towards the March 2022 high. This is also the right shoulder, and similar, there's also a left shoulder. So we point out that in previous videos that our next target is perhaps 45.40, which is really the shoulder level of this head shoulder pattern here, which is when the market topped in early 2022. So that's the target for the S&P500, and obviously now it had like 5 green weeks. So it won't be surprising if it pull back a little bit, but it's also possible that it may just have one latter week and then continue to the marching high. But I think that at the 45.40, it's going to be a lot of struggle, and so we will see what the market will perform in the coming weeks. Now, for the S&P500, so there's a little bit of room, about like 150 points to go. For the Russell, you can see it has been still in this trailing range, but we think that the Russell has more room to go. It will first get to the top of this trailing range, and then it's very likely it's going to also test the February 2022 high. So the target for the Russell 2000 is probably around at least 2100. So there's a couple hundred points to go for the Russell 2000. In other words, in the coming weeks, we expect the small caps are going to outperform the larger caps. So, and you can actually see this from that next chart. This is the ratio of the Russell 2000 to S&P500. And we point out in previous videos that actually during the previous 2 cycles, which is also accompanied by recessions, this is during the 2000 bear market, this is during the 2008 bear market. So a new economic cycle really kind of starts in the middle of recession, or around the middle of recession, when actually the small caps start to kind of outperform the larger caps. So the small caps usually kind of underperform the larger caps even well before the recession starts. So this is usually kind of the cycle feature that we're looking at. And now you look at the recent ratio in the last few years, you can see it looks like it's indeed very much like look like this kind of pattern. So it's really kind of signify the start of a new cycle, and now you can see that the small caps are just start to kind of outperform the larger caps. So let's take a close look at what actually happened to this ratio in the past 3 years. So you can see that this is a low, and then this is another low, but this is actually a higher low. So you made a higher low, and the cycle really kind of started when this ratio bottomed at a 0.4133. And then at the end of May this year, you can see the ratio made another low, but this is a high low at 4186. And now it just kind of started kind of retest, and we think that the rebound is kind of imminent. So, and in fact, if this is indeed the start of a new cycle, then it has a long way to go for the small caps to catch up and to get to at least 0.55 and possibly get to the 0.6 level, and it could even go higher, for the small caps to outperform the larger caps in the coming years. So this is a multi-year sort of cycle that we should really kind of pay attention. And lastly, we want to show also this what the 10-year treasury yield is telling us. And we showed this chart actually in the past videos, and we just really want to kind of reiterate what this chart is telling us. And generally, you can see that the Russell 2000 and the 10-year treasury yield are really kind of correlated. And during the normal times, they are positively correlated, meaning that whenever the treasury yield is up, the Russell 2000 is also up. When the treasury yield is down, the Russell 2000 is also weak. And then since the beginning of this bear market, which is January 2022 to about October 2022, they are negatively correlated. When the yield is up, the market is down. And then since October 2022, which is really kind of the bottom of this, this bear market that we are seeing now, you can see that actually they are back to the positive correlation territory. So yield is up and down, market is up and down. So now you can see the yield is up again, and the Russell 2000 is also started kind of climbing. And we point out that there's a kind of resistance here, and it looks like the 10-year treasury is just kind of at the top of the resistance lines. And we think it's very likely it's going to break above because it has been at this level for several weeks now. And this is going to be really kind of interesting because if it does break up, it also suggests that we will be seeing some kind of upside surprise on the fundamentals, which usually people do not really expect. Everybody is kind of expecting the Federal Reserve might be doing a rate cut, but it's possible that actually we have a positive surprise on the economic side. And if that's true, then once the 10-year treasury yield break above this resistance, we think the Russell 2000, because of the positive correlation, it will follow suit. It will also kind of start go up. So for the Russell 2000, we expect that it's going to be test not only break above this side trending range, it's going to also go above and test the level that was last seen in February of 2022, which is around 2100. So this is really kind of interesting, and I know that the market has been on a tear in the recent weeks. So everybody's kind of started getting nervous and feel like, oh, maybe this is it. The market should kind of come back down again. We do need to kind of remain cautious, but I think that perhaps there's more upside room ahead, for the major indices, because it looks like there's still a lot of pessimism in investors regarding what the economy will do, and then although that I do think that recession will be inevitable at some point, but the exact time is just kind of difficult. So for the kind of intermediate term, I think that the surprise could be actually more on the upside. So I hope you have enjoyed this video and find the information presented here interesting. Again, your support really means a lot to this channel. So please do not forget to click the like button and also to subscribe to our channel if you have not done that. So again, thanks a lot for your support, and see you in next video.